All right, traders, Damien here. This is the much awaited expectation on the order flow. How deep should price correct and how far should it extend? What can we use to help us determine this and have realistic expectation as to the corrections that we might get and the expectations that we might have on the new structure high? Now, I said before in previous videos not to be afraid to take harmonic lines and project them forward. Okay, I'm gonna draw this out so you can see how it is applied and how it correlates to with the benefit of hindsight. And then, like always, we're going to go back to a random period of time and we're going to go through this exercise in real time. Okay, so here we have clear points that we could use to project price forward. We have, and that's why I like to use the crosshairs, because I can draw a line with any angle I want and still achieve the height that I want without having to draw really flat lines when price is a little flat like this. Okay, and here I have areas that I'm particularly interested in for price to help me come up with areas where price should have a reaction to. We all know that our expectation from the market is for price to achieve a one-to-one on the extension. Okay, my particular goal from a Fibonacci extension standpoint is that once price breaks a high, I expect price to get to the 127 extension. That is my minimum requirement to say that I have achieved a decent projection. Price should definitely get to the 127 extension before that correction. That tells me that this trend is somewhat healthy, is somewhat holding on to some degree of strength, because if price doesn't get to that exhaustion point, as the 127 being the first level of exhaustion, then that tells me that there's significant breakdown in price action, that I may not achieve a extended trend in that particular direction. So the 127 extension is a requirement, okay, from an extension standpoint. It's the first level of exhaustion. It's something that price must at least get to for me to know that this trend is likely to continue moving in the direction that is currently moving. The next thing I want to do is find these harmonic termination points and understand the relationship between the one-to-one extension, the one-to-one completion, and the Fibonacci extension. Find that confluence between here and here to help me understand where that correction is likely to come in. Okay, so now the next thing I want to try to figure out is how deep is price likely to come. Now we've made a relatively weak new structure high here, right? Because price only got to the 127. Okay, and we've made a correction from that. We corrected here, wasn't that deep, and price made a weak new structure high. So expectation is for a deeper correction. So what can we use from a corrective standpoint to help us understand how deep price can go? We can use harmonics and a combination of structure and ratios to help us understand where price is likely to come in. And we see that there's a relationship between the correction that we had harmonically and this one. And we have the ratios and we have the structure. We have structure here. We have price come up, find a little bit of resistance here, break through, came back, find a little bit of support, went up, came back down, found a little bit of support, broke back through. Okay, but nonetheless, price respected this little area of structure. Now price went on and made a new structure high. Now projection was better here. We made a better projection from here to here than we had from here to here. So what is our expectation? Our expectation is for a not as deep correction as we had in this particular swing. So correction should weaken coming down. But what happens on this? Well, we have a weaker momentum even though we have better projection. So when you look at relationship between this depth and this swing and this depth, although it was the same as this, in relation to this swing, it was deeper, right? So we have deeper depth, we have weaker momentum, so that tells us what? We should have a deeper depth on this swing than we had here. So again, what do? Well, we do have equal depth here, so we can at the very least expect a correction to this general area. Where's the strongest structure that's deep to this? Well, we see that we had a little bit of structure here, we have structure here, we have structure here, and where do our Fibonacci ratios come into play? We see that we have the 786, we see that we have price here, we see that we have structure here. So somewhere in this general area is where you would expect what? Price to find that support. Okay? And that's how we start building our case and start finding that confluence, for price to find that support and eventually go on to make the next expectation. Now projecting what? Harmonics forward, what is our expectation on the projection? What would we expect? Well, we have, again, this projecting it forward, look across. Okay? Look across. Okay? No accident. Okay? We have to be aware enough and smart enough to project these forward and understand where price is likely to find exhaustion. Okay? And what do we expect? At minimum of 127. Okay? So if you're a trader that likes to take counter trend trades, I wouldn't take anything unless price at minimum hits one of these exhaustion levels. I don't care if the harmonics complete here. This may be just a very shallow correction into this particular area here before price does what? Goes on to make a new structure high. Now our expectation here is for price to come back and make a deeper correction. Where's the structure? Right here, right here, right here, where we would expect price to come to. We would expect price to do that and come into this, and come back into that general area right here, right? That's what we would expect. Okay, what did price come to? Pretty close to this area, right? Structure, 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 look across. It's not always going to be perfect, but we do have price coming to an area of interest, great rotation in price, expectations a new structure high. This is an area that you would, take a possible trade in. I wouldn't have gone after this trade because risk reward is probably not great. I was expecting a deeper correction than I actually got. Price is showing me some evidence of breakdown here. We're not really moving very swiftly to the upside. So this looks impressive, but it may not be all that impressive. Time will tell. Okay? The most important thing here is to not take trades on price's terms. Take them on your terms. Wait for price to come into an area that's important to you, that you have pre-identified as an area that price should come back to and should respect, and then wait for price to respect that area to then take your trade with more confidence, to give yourself a better risk reward. So I'm going to clear this up, and we're going to go back to a random period of time, and we're going to do this exercise again without the benefit of hindsight, just to show you a more realistic application of these techniques. This takes practice. There is some degree of subjectivity to this, but because there is some subjectivity to this, what you want to do is find the stronger areas of structure, and the more confluence you have in that general area, the better you're going to feel about that expectation. We're always going to have an expectation of price. You make a strong new structure high, you expect a weak pullback. You make a weak new structure high, you expect a deeper pullback. What you want to do is find the strongest structure that's in line with an expectation to make you feel better about that particular trade setup. So again, let's go back to a random period of time, somewhere here, and We see that we have here. Okay, we got to work a little late today. It's 9:40. We have the market open. So what do we want to do? The first thing we want to do is assess what the expectation is from a structure standpoint. We see the price came back here. Whether this is a higher low, a new structure high, it doesn't matter. It doesn't matter what's behind us. Okay, price has spoken, has made a new structure high, has made a higher low, has a complex correction into a very weak new structure high. Okay, so what's our expectation? Our expectation is for a deep correction, right? So where's the clear low and the clear high? Clear low, clear high, right? So if you're a Fibonacci user, what do? You draw your Fibonacci retracements. What do you see? Okay, I see price trying to find support in this general area. I see that I do have some structure there. Is this consistent with my expectation on a correction? No, I expect a deeper correction. Okay, I see a generalized weak pullback with a little bit of greater volume here. Now, I don't want to get too crazy into the bar by bar, but what we want to do here is wait a little bit and see that we have the bears come back into this. There may be a complex correction into that expectation of a deeper correction that we would expect. So where's the important structure in the area? Well, we see we have some structure here, we have some structure here, and we have some structure here. We don't expect price to get what? All the way down here. That would be almost a 100% correction, which would what? Make our expectation of a new structure high somewhat a little bit of an unrealistic expectation. It's still the expectation, but what is reasonable? Always ask yourself, what is reasonable? What is the strongest structure in the area? Okay, and if I had to come up with the structure, I say that I have structure here, and structure in this broad area here. What do I have? Well, I have a correction here that I can project forward that ends somewhere in this rectangle. Okay, and I have some structure down here that will be a little too deep. I want to see my corrections deepest will be the 786. If price doesn't respect the 786, I'm not taking this trade. Okay, so I'm going to move price forward. Okay, and I see that I have a rotation in price here that's consistent with some of this structure. Didn't quite get down here. Do I want to take this risk? What is my expectation? My expectation was for a deep correction. I'm respecting the 50% ratio right now. Okay, do I want to let this go and see if I get another point down? Yes. I want to see if I get a little deeper into this, as I do see that I have some breakdown here and I've made a very weak new structure high. I want to see if my expectation is realistic, and I want to see if I can get a better risk reward if I take a long here in case price does fail to make that new structure high, and I do get price moving against me, that I take a small hit versus a bigger one. Okay, and I see that I have a rotation in price very deep into this. I see that I have momentum increase to the downside. This is not a particular trade that I would be happy taking, and therefore I would wait a little more to see what price is going to do. Okay, and now I have a stronger signal here, a bigger rotation in price, something that tells me that it took a lot for price to make this type of attempt to buy in this general area. Is consistent across with what happened in this area. There's decent support at this level. It presents a great possible risk reward in this particular trade, but I do have to understand that if I take this trade, it also increases my risk, as I was not expecting the bears to increase their strength here. So if I take this signal, I would have to be very aggressive with it, and I would have to ensure that price is probably not going to make a lower high than a new structure low. But we're here to trade, and we're here to take the signals that's consistent with what? Our area of interest. And price definitely reacted to our area of interest and poses a great risk reward profile. Where does my stop have to be? At minimum below the 786, and below what? structure, right? We have structure here, structure here, structure. Do I want it to be way down here? No. Do I want to minimize my risk because I see there's issues with this particular trade? Yes. So my stop would have to be a couple of points below this at minimum. And this is a high risk trade. Okay. What is happening here? Bad news, right? Trade started going immediately in favor, found resistance in this general area. I may be in trouble here. I may be taken out, and that's fine. I understood these risks before I took this trade. Okay, but it posed a good risk reward, and my expectation is still what? For a new structure high. Until this low is taken out, and that's why my stop is underneath that, my expectation is for a new structure high. I can tell you that I am probably going to be taken out here, and like I said, that's okay. I knew those risks before I took that trade, and I stand by the risk that I have accepted, and I am responsible for this trade. Okay, and I got taken out here, and like I said, that's quite okay. Price has spoken and produced a new structure low, so now my expectation is for price to produce a lower high altogether, and then do what? Have a new structure low. So again, now the operation becomes the same but backwards. I took a loss here. Let's quantify that loss. 42 points. Ouch. Let's make it red. Not pink, red. Okay, and now what we want to do is now we want to say, okay, so now that price has made a new structure low, we expect for price to come back and make a lower high and a new structure low. Where are we likely to see that? Well, we have projected forward, right? We have an area down here. Okay, what are we expecting the correction? We had a great new structure low. What do we expect? A weak pullback, right? Where's the structure? Right? Draw it across. Okay, ratios. Okay, did we get to the 382? No. Is that a requirement for me? Yes. We haven't even gotten to this area of structure, and price is already rotating. Okay, why do I not want to chase this? Well, price tried to find support here. What happens if price all of a sudden finds support here again and starts going back this way? I have a very deep, okay, correction here that I don't want to go through that pain. So if this thing gets away from me, so be it. Okay, and now we have another attempt to what? Correct, right? And where's the clear high and the clear low? Well, right now it's right here. Where's my structure? Here, am I going to get this deep into this possible correction? Maybe not. But what do I need to do? I need to be patient. I can't be chasing after price, because a mistake here, okay, puts you in a very bad situation when it comes to risk reward. Okay, I can't let this 42 point hit, okay, dictate chasing price, getting anxious. I got to make up that loss. No, that's in the past. That's gone. History. It doesn't matter. Okay, what I need to worry about? The next setup, the next area of interest, taking the trade on my terms. Because if I do that, I have a higher probability of erasing this loss and coming out with some points. Okay? So now I have a good attempt to correct here. Excuse me, I'm still getting a lot of reflex here from whatever I ate. So now you say, well, where's a clear high and a clear low? Well, right now you just have a runaway train that you want to try to get in this. So your clearest shot right now is right here and right here, or right there and right there. This is assuming you're correcting from. Okay, you don't have a whole lot of structure. You do have a little bit of structure here. Okay, so right now This is a particular trade that you're accepting responsibility, getting short here. Okay, your stop has to go above this area. Okay, and what's your expectation? At minimum, what? A 1-to-1 to the downside, right? So you can say at minimum it should be this. Okay, what you want to say is you want to draw your extensions. Okay, and say, well, is my risk reward great? It's about 1-to-1 right now. Okay, so what I want to do is I want to get to a break even as quickly as possible, so I don't have that 1-to-1 lingering for a lot longer. Okay, so now I'm not particularly happy with the way this trade is progressing. As price is moving sideways, price should have made that new structure low. Okay, so now I tested the lows. I'm going to don't have a whole lot of room to get to a break even, but what can I do? I can remove a lot of that risk. Okay, and now that I've broken through, I can get to that break even, okay, to protect my trade. And I can see prices moving on very nicely to the downside. I've extended, okay, I've extended past my 1-to-1. So what can I do? I can lock in on my 1-to-1 and let price continue or take me out. Okay, and now I can lock in at the 161 because I've gone beyond what's normal and reasonable from an extension standpoint beyond this area. Okay, and now price is trying to come up. Am I going to be taken out? Yes, I got taken out. Okay, so that's what I was telling you as far as what is reasonable, what is realistic expectation. You have price break away and run away. Now, is it reasonable to expect price to come back to the 38 of this whole clear high and clear low just because you expect a weak pullback? No, that's completely unreasonable. Price is not showing you its intent to do that. It's reacting more off of these short-term swings. So what do you need to do? You need to be vigilant, you need to be aware, and you need to have realistic expectations. Okay, now we took that trade right there, so let's see what that equates to as far as a winner, which this one turned out to be. And we got taken out here. We made 56 points, so we've erased that loss and have about 6 points of profit for the day. Okay, but the day's still young and the market's still strong, and we can see what price achieves here. Now we have a clear high, a clear lower high, and a new structural low. What is our expectation as far as a correction? Well, we don't expect a strong correction. We expect a weak one, right? We have an increase of momentum. We have an increase of projection. We had very crappy depth here. The bulls try to come in and weren't very strong. So we don't expect anything too strong. But what do we expect? At the very least, we expect what? A 38% correction. So we want to see that. Okay, what did price achieve on the most recent correction? Price achieved that. What would that look like here? To about the 382. Okay, and it looks like we missed this train. Then maybe we didn't. Now we see that we had a very weak new structure low. We have the buyers trying to come in again. And we did miss this. And that's quite okay. We don't always have to take every signal. Look, if you would have chased this signal, it would have turned out to be profitable. But where's your risk? Where do you have to put your stop? Way up here. Do you want to take on that much risk for a potential trade that may give you a 1-to-1? That is the expectation, but that doesn't mean the price has to achieve that. Okay? So now, do we have an opportunity to get back in this? Yes, we have a great opportunity to get back in this. As we see that the bears achieved new structure lows, we see that the bulls tried to come back. Okay, the clear low, the clear higher lows here, the clear new structure low is here. So now we have a fairly decent trading opportunity that shows that the bears still look like they have volume and will to keep taking price lower. Price has made a series of complex corrections here. Has price made a new structure high? No. Is price correcting deeply into this? When we talk about clear low and clear high, this is a clear low, this is a clear high. What is price doing? Correcting within this, right? We have good rotation in price. Expectation is what? A new structure low. This is a reasonable trade to take. Did price get to the 382? Yes, it did. Okay, criteria 1 met. Is there a structure in this general area? Yes, price broke here. Price has found resistance in this general area. Price is appearing to finding some resistance in this general area. Is this an acceptable trade to take? Yes. Where would our stop have to be? Well, at the very least above the 78.6. That's a little rich, but what's my expectation? My expectation is for a new structure low. Am I good to go? Yes, I am. Do I like this right here? No. Looks like I may be taken out. I'm probably going to be taken out here, and I got taken out, and that's okay. The point is that you can't always come up and have a trading situation where you're going to win every day. Okay, some days you're going to take the loss. Okay, but if you take trades consistent with the expectation and understanding what's reasonable and what price should achieve and where price should find support or resistance, some days you're going to get beat up, like in this example, but on most days you're going to come out ahead. I'm going to extend this video a little bit further. Excuse me, again, because I want you to see how you saw a day that wasn't that good. I want to show you a day that is good. You know, in this particular situation, we had price not come back to areas that we wanted to take the trade. It wasn't on our terms, and when we took this trade, it was a trade that worked against us. And that's, like I said, okay. So I'm going to move forward to the next day. And we're going to erase all these things here. And we're going to move to the next trading day. Okay, and here we got to our workstation a little early. It's 8:35 in the morning, my time. And we see, what do we see? Okay, well, the market had a new structure high here, had a retest, had a higher low, complex correction, price couldn't make a new structure high. This was the corrective swing. We broke below it, so now we've made a new structure low. We had a weak pullback, and we had a strong new structure low. We had a weak pullback. We should have a strong new structure low. We have a correction here, and we have 9 o'clock. We see that we have a retest here, and we have a new structure high. So now the market is speaking to us and telling us that it wants to head up again. So now we want to assess if there is a trading opportunity and where. So the first thing we want to do is say that we have this much projection. Our expectations from the market to do what now? Have a higher low and a new structure high. Where is the structure in this general area? Well, structure is here and here. So we draw our ratios here, and we see that we have structure in this general area, which is a broad area. What we want to do is have, well, price didn't even get back to the 382, so there wasn't anything for us to do here. Okay, so what do? Reassess. Delete here. Draw. This is the okay. Price is not really getting back, so now we're starting to see some of that structure area that we're interested in here. We're starting to see that price gets past the 786. I'm not particularly happy about this. I see that I have an increase in momentum to the downside. I see that I've broken this structure area. It's a little hard to tell here whether we corrected from here or we corrected from here. This is the swing that made the new structure high. This did not make a new structure high, so this is the swing that we're correcting from. Okay, so we've made a new structure low. Okay, so my expectation now is to get a deep correction into an area of structure right here, and for price to what? To try to head back down again. So what I want to do is look for a trade that's consistent with that. So now that I have price hit that 50%, hit that area of structure, my expectations are what? For price to try to get back down there. Price didn't get as deep as you would expect on a very weak new structure low, but this is a market that was bearish, tried to get bullish, held on, but now it's trying to get bearish again. We had increase in momentum, so it's okay to expect here that price is not going to get very deep into this general area, and it's worth taking that trade to the downside. Stops would have to be above this general area here. I want to be aggressive with this and remove risk as quickly as possible. So once price gets past this, I want to get to a break-even point. Okay, I want to do that right now. Protect my trade. It's all about trade protection. Didn't get to a 1-to-1 to the downside, which is what? Minimum requirement, minimum expectation, right? But my trade is protected, right? And I'm going to be taken out, and that's fine. Do I have an opportunity to get in again? Yes. Has price spoken to me and told me it wants to head back down? Yes. Do I want to see price respect this zone? Yes. Has price respected that zone? No. Okay. Did price make a new structure high? Yes. Do I want to take a short here with the expectation of a new structure low? No. Where's price? Deeper than I expected. Okay, I already took a short here. Price didn't get to my 1-to-1 expectation. Okay, what does that tell me? Very weak. Okay, what did price achieve? A new structure high. Where does this market want to go? Well, overall, what have we made? A higher low, right? Price may want to break and make a new structure high. So what do I want to do? I want to position myself where? I want to position myself. I want to see how price comes back down here into this area so that I can take a possible long into a new structure high. Okay? What am I going to do? I'm going to erase this. I am going to draw a new fib of this. Okay? Price is speaking to me. It broke structure. It's telling me what? I want to go up. What do I expect? I expect a deep correction or complex correction. Okay? Because after price makes a new structure low and it makes a new structure high in one swing, what is one of my expectations for a possible complex correction, right? What are we seeing here? Complexity, right? Some of that complex correction. Price made a better new structure high than we expected. What does that tell us as far as expecting a new structure high overall? Even better, right? So what I want to see if price can get down here. I don't like the strength. Okay. Now, does this give me a pretty good risk reward for the expectation of a new structure high? Yes, it does. Because if I enter here, my stop has to be what? Below the structure area, right? My expectation should be what? A new structure high, right? Because we retested the high. It would be unreasonable to expect a new structure low. Do I like this momentum coming back down? No, I do not. Is it worth the risk? Yes, it is. Because my expectation is what? A new structure high. Retest the high. My stop was below this, right? Move to a break even. Okay, and you have room to give yourself even more here. Okay, depending on what your trade management rules are. What was your expectation? A 1-to-1 to the upside. Did you achieve that? Not quite yet, right? But your expectation should be what? A very weak new structure high, right? Okay, what's happening here? Price came back weak, higher low. Expectations for price to break through this area and get through it pretty good, right? So what can you do? You can adjust your stop a little more right below these little tails here. And now you can look for extended targets up in this general area. So what can you do now? Now you can lock at structure. And see now prices, you can get a little more aggressive with this. Get even more aggressive. Why? Because you are in a area of what? Exhaustion. Price should not continue very much further without having what? A decent correction. But as long as price keeps doing this, what do you keep doing? Locking in, getting more aggressive, and now you were taken out. What did you do? $129 points. Okay. Slightly better than break even here. What did you get? $9 points. Lock in 10, 10 points is what I usually lock in. Okay. So now you see what a bad day looks like. Now you have what a good day looks like. And what do? Nothing more than follow and have a reasonable expectation based on structure and order flow, okay, and manage our trade the way it needed to be managed. Price spoke to us here. Failed, made a new structure low, made a new structure high. Price extended past the area that we would expect a deep correction. Now we get a little bit of a complex correction here. Price increased strength to the downside. It wasn't particularly happy, but the risk was very small. I was risking not that much for a potential great reward. And that's exactly what I got, because what was my expectation here? For price to make a new structure high. It wasn't for price to make a new structure low. The fact that price came down with more aggression and deeper than I expected to only gave me a better risk reward. Okay, did I have to be aggressive with the trade? Yes. Did I have to understand that there was a possibility that the trade may fail? Yes. But now you see how we look for a correction into an area of structure that matched with an expectation and ratio confluence, and how we got to that break-even point. Now this trade at one point was 53 points in favor. Could you have been aggressive and taken 50, 45, 20? Yes, whatever your trade management rules are. Okay, I like to give the trades more room and try to get to that 1-to-1 and be aggressive once price gets past that 1-to-1 and look for extended targets, than be taken out prematurely and then watch, instead of taking 20 points or 30 points when I could have taken 130 points, 120 points. It's not about frequency, it's about quality of trades. I'd rather be in one trade, okay, and manage that trade and maximize the efficiency of that trade, than to take on 3 or 4 trades, which increases my risk technically, because every time I enter that trade, I always enter from a position of risk. I always have capital at risk until I can get to that break even. Okay, so again, I want to minimize the amount of trades I take, and I want the ones that I do take to have the best risk reward profile, the best probability, and understand that some days, okay, you're just not going to win, and those losses don't matter. As you saw, okay, on potentially one trade here, depending on how your trade management rules are, and on this particular trade, taking 129, that more than made up for the bad day you had yesterday. Okay, so don't let bad days or losing days be a stress into your next trading day. Okay, manage the trades the way you need to manage them. Use the information on the chart. You guys are empowered. You are able to read the price action. You are able to make smart decisions. Make them on your terms, not on prices. Wait until price comes back into an area of interest. This video is at 41 minutes already, so it's long enough. I'm going to cut it here. I can always make another one for you if you need to see more of this. But I'm sort of glad that, you know, you saw a day where I would have gotten beat up trading. You haven't really seen that yet, so I'm glad that you were able to see it, and that I don't cherry pick things. I go back to a period of randomness in the price action, so you can see how it would be as real as possible. And on that particular day, we got beat up. Here we won, and won huge. Okay, so this one ended up being, 9-10 points. This one ended up being 129 points, and just shows you that this style of trading is amazing. It's really accurate. The losing days are insignificant because your winning days are going to overpower those, and you're going to have a lot more winning days than you're going to have losing days. A lot more winning days, you're going to have losing days. So that's enough for this video. I want you to process that. There is a learning curve to order flow. It does take a little bit of time for you to develop your eyes and to keep those expectations in mind. I anticipate having to make another one of these, maybe even another one after that. That's quite okay. If you really need it, I will make it. There isn't a race here. We don't have to all get it the very first time. And since I don't cherry pick these charts, you're able to see, good days and bad days, which I appreciate. I hope you guys do too. And how it's insignificant, and you just have to keep following the process and use your money management, and you're going to come out more than okay. Okay, so that's it. I hope this video had value to you. Please post questions, concerns, comments, and we'll see you in the next video.